until today, you had corn higher 4 out of 5 days.
Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. And as we head into a long holiday weekend, I bring aboard Eric Relph, a market analyst and broker with Comstock Investments, so we can take a look at how we wrapped up the week. And let's take a look at this grain market activity here on a Friday. Eric, everything seemed to kind of slip and slide a little bit. Seemed like maybe some overseas tariff news might have been the culprit.
Yeah, I think that was the bulk of it. You had the announcement this morning that Trump was going to put a 50% tariff on the EU effective on June 1st. And I think a lot of that was a result of the EU making a mineral deal with Greenland and, just things going on in the background that obviously ruffled some feathers. And we saw some reactions to that in broader markets as well as the grain markets, and then just couldn't really get traction throughout the day. End up finishing July corn down 3.5 at 459.5. Still not a bad finish for the week when you consider that the first 4 days of the week we were higher each day, and notably higher on a couple of those. So not a terrible finish for sure. Just kind of a softer note to finish the week ahead of a holiday weekend. Not a huge surprise either.
Well, and then you have to keep in mind that, we're going to have a 3-day holiday weekend, but next week represents the end of the month. Sometimes funky things can happen at the end of a month, too.
Sure. And keeping in mind, too, that although not a super heavy volume month, June options did expire today. And we took the corn off right around the 460 mark and took the beans off right around the 1060 mark. So those were obviously some targets for option expiration as well. And, finishing a little softer, not a big surprise.
So does that mean they are free now?
Yeah, I suppose for a little while. We'll have to see what the weather looks like as we move into next week. But yeah, that's kind of the way things are looking right now.
So as you look at them comparatively, corn, beans, wheat, and maybe some of the other markets too, does any of them show any opportunity for a bounce anytime soon?
Well, I think the corn and wheat are both trying here, and now we've got enough bounce just this week where you already saw a setback in the wheat. You could see a little more setback in the corn before you find footing again. But realistically, I mean, everything is so headline driven and susceptible to whatever the broader markets are doing. I think it's a little tough to kind of pinpoint, okay, is this an opportunity or are we just waiting on the next shoe to drop? In the case of soybeans, they've been led around by soybean oil, which has been steered completely by headlines regarding renewable fuels, biodiesel, particularly sustainable aviation fuel, all of it. The 45Z made it through. And then, of course, we start talking about RIN waivers and what's that impact look like for soybean oil, not only that, but ethanol as well. So corn getting reactive now, too, with that chatter. And what's going to come of this bill remains to be seen.
Isn't it interesting how the wheat market can continually stage a bit of a rally, but it always meets resistance at that long-term downtrend line, and it cannot bust through it. And it seemed to do it again this past week.
Yeah, for sure did. And KC's been kind of the leader here. And all of a sudden you have KC and Chicago trading almost equal price, or they have traded equal price at times this week. And so there's quite a bit of spread activity being attracted at that point. You would think KC would have a premium. For those that don't realize that rain doesn't necessarily make grain when you're talking about wheat, because sometimes it prevents you from being able to get your hands on it. Also can prevent it from growing. So a lot of the SRW country that's been getting all the rainfall in the Eastern Corn Belt, although, the moisture's nice, eventually it becomes too much and then the wheat just gets suffocated. Or it gets to the point where it's turned, which we're getting closer now, and then the stalks soften and then it lays down in the field. You can't get it out.
So did the weather, the longer range weather outlook, did it turn more beneficial to corn and soybean development? Because there had been a lot of talk that maybe after the holiday period, when you get into June, things might turn hot and dry.
I think that's still the case, and it depends. You can look at 3 different forecasts and get 2 completely different ideas, but it makes sense too. When you look at the EU model versus the GFS is fairly wet. No concerning looks in the GFS model, but then you look at the EU, it looks quite a bit hotter, quite a bit drier. And at the end of the day, we still have a severe drought situation in Southwest Texas, and Mexico is still in the midst of a multi-year generational drought. if that migrates north, then you've got a real problem, and the potential still exists as long as we've got that bright red on the drought monitor down there in Southwest Texas.
Well, and the thing is, I think by and large, so far this year, the European model has been a lot more accurate.
A lot more accurate, and it's the drier of the two, in case anybody missed that on the first go around here. So the more accurate model is actually looking to be hotter and drier. They're looking for a high pressure ridge system to set up over the western core belt and the plains. And this is a time when we can ill afford that, because although we did have some nice sweeping rains over the past week, it's just going to buy us a little bit of time. If that sets up shop and we get hot, we got a problem.
One thing I haven't heard a lot of talk about, Eric, there is an area in northern Illinois that seems to be getting missed for the most part this year. Now, I don't know if they got much relief this past week, but that is one area that I've been watching where they are way behind on pre-sale.
The heavy rains stay north of them, and yes, they are way behind. And everybody wants to talk about southern Illinois being in flood conditions nearly. Planters didn't get rolling until this past week. Last weekend, a lot got planted in southern Illinois, but then you had the rains move in right behind that. So I don't know how far we made it. We'll look for a crop progress report on Monday to give us some guidance there. But yeah, the area you're talking about, northern Illinois, they did miss the bulk of this last rain. I'm sure there were some scattered showers. I wasn't actively watching the radar in real time, but they had to have caught some peripheral stuff. But the main band swept north of them and stayed north of them. So this continues to be a problem for a lot of areas. And, I'm sitting in Royal, Iowa. We had 1.7 inches over the past week. 30 miles north where I live in Spirit Lake, we had 5. A huge difference in this 30 miles. And though we can use more here, even after getting that 1.7 in the last week. So yes, it'll buy us a little time, but we need more following.
Friday, after the markets closed, we did get USDA's cattle on feed report for the month of May. Let's take a look at the numbers. On feed number came out at 98%, and the trade was looking for a roughly 98%, maybe a little more. Placements, no big surprise, 97% as expected, and marketings, 97% again, basically as expected. So no surprise when it comes to the cattle on feed report, apparently. What do you think that means for next week now?
I think we probably had a supportive report dialed in. I had a lot of people saying, well, we had all those wet conditions, particularly in the panhandle of Texas and Oklahoma and even portions of Kansas during the month of April. And that's true, we did. But if you go around those areas or talk to people in those areas, you start talking the likes of western Nebraska, western Kansas, you've got any grassland and potential grazing ground has been drying up terribly. We've talked about that in our Wednesday meeting about western Nebraska just this week. So those cattle are coming off grass. Cattle came off of wheat in April as they were supposed to. I think you even had that conversation about they expected to see more cattle out grazing, and they weren't, because they did get pulled off in the month of April. And so all those cattle had to go somewhere. And with the conditions that they have out in that part of the world, they went onto commercial feed. So where you were hoping for maybe a surprisingly low placement number, you didn't get it. It was right in line with expectations. And with a narrow range of estimates, one of two things is going to happen. You're going to have a completely neutral report, which is what we got, or you're going to have some surprise outlier. And that wasn't the case this time around. I would suspect that the market is probably a little too hot for this cattle on feed report, as they seem to be pumping a little premium in the last 2 days.
Well, that live cattle market, if you look at the June contract, it's still just a stone's throw away from record high prices. If you look at the feeder cattle trade, you know what? It almost came back and closed that gap that had been resting just above the market. It got within just a whisker of doing that on Friday. So now what? It seems like the trade just really wants to go fill that gap.
Yeah, talking about the August feeder cattle specifically, we got very close, within 20 cents of filling that gap. It would have filled at 301.32. That was the low on that reversal day. Today we got up to 301.12, so exactly 20 cents away. But then finished 75, 80 cents off the high at $300.37, just struggling. And, I had talked about in my morning videos within the Comstock report that gap level was probably going to uncover some hedge pressure. It seems so far that we have, but still closing above $300 is very good in the case of the feeder cattle. Live cattle, which you started with on the June contract, right here, we're sitting at $215.80. So we are inside of $3 from the all-time high before the reversal day lower. Uh, that's doable within a day or two. Talked about that a little bit this morning too. I mean, this is not an out of sight potential. This is definitely something that could happen, especially when you have the national average cash running somewhere in the mid to upper 220s and June live cattle at 215.80. There's room for that run to happen.
Isn't that especially impressive the way the equity markets have been under pressure lately?
Absolutely. And, until today, you had corn higher 4 out of 5 days. And so all of that outside pressure was just fairly well absorbed, and the market just kept doing what it's doing, and that is continuing to surprise to the top side.
So what do you see happening with trends in the cash market nowadays?
So this week is the first week where I could say we've definitely plateaued. We didn't have any cash trade this week that exceeded the top end of last week's trade, although I do think we're going to see a national average that's a little bit higher. We've just seen more volume of negotiated trade in the north, particularly on a dress basis. We should see that dress price improve something like $2 this week. I would expect to see $1 to $1.50 improvement on a live basis because we're starting to see some northern packers going to Kansas and pull the cattle north. They'd rather go buy them cheaper in Kansas, even if it's only a few dollars, and put some wheels on them for a couple hundred miles and be done. So they're going to try to make some extra money that way.
Seems like lean hogs are just content to be spectators right now, kind of chopping around sideways in the middle of the range. Are they just happy where they are? What do you think here?
Well, it seems that we just every time we get that June up to about $100, we uncover hedge pressure and we keep struggling to get through there. Now, I personally believe that there's a storyline developing nationwide in the hog market that is going to blow out these resistance numbers at some point. I just can't say whether it's going to be the June contract or the August, and maybe it's the July in between. Point being, at some point here over the next couple of months, I think you're going to see some very limited numbers of market ready supply. Some of the stories I'm hearing from firsthand sources that own hog barns and are having visitors come on the grounds, come on the yards asking questions from some very unconventional major pork producers and therefore hog buyers. It's happening in a pretty big swath of the Iowa, Minnesota hog production region.
Interesting. Well, okay, we're looking at a 3-day holiday weekend. There will be no markets on Monday, just to clarify with everybody. From what I understand, there will be no Sunday night trade. The market will resume with Globex trade on Monday evening. Is that right?
Yeah, that's right. So we've got the Globex will reopen we've got financials and interest rate and markets as well as metals and energies will trade, but we won't see our normal ag trade until Tuesday.
Okie doke. Well, you have a good holiday weekend. Thanks for joining us, and take a little relaxing break here for a day or so. Appreciate all the help. We'll talk again hopefully next week. Eric Relph, market analyst and broker with Comstock Investments. That'll do it for this episode. Thank you so much once again for joining us. Appreciate that, and I hope you have a very happy and safe weekend. For producer Breanne Jenkins, I'm Marlin Bohling. We'll catch you next time here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.